This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome back to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, and joined, as always, by my good friend Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
I'm good. And back again for, I don't know, like the fourth or fifth time, we have Kat Utek from Core Innovation Capital. How are you doing, Kat?
Doing well. Happy to be the first show of 2022. So excited to be here. Thanks for having me.
And so just, you were just talking before we hit record. You got to tell us a little bit about what you did over the holidays.
Yeah, so I went scuba diving in Mount Palo. For anyone in the audience that likes to scuba dive and they're like actually really good at scuba diving, I highly suggest it. It's a 30-hour boat ride off the coast of Colombia. It's just as good as like a Galapagos, Socorro. And what else would I be doing but swimming with the sharks? So during work, during the holidays, I just love it. But no, highly suggest Mount Palo. So go.
Okay. Well, let's get into the news. Busy news week. I want to lead off with SoFi because the SoFi have first they applied for a banking license, then they just said they were going to acquire a bank, and now they have received approval from the OCC and the Fed. So they're getting much closer to becoming a bank, SoFi Bank. The stock, I didn't actually check what the closing price was, but when I looked this morning, they were up like 35% over the past 2 days. So they're going to acquire a community bank in California, and that deal should close next month. So we're going to see SoFi Bank pretty soon, I would imagine.
Yep. I think it's nice to see the OCC has managed to find a fintech application that they like. So that's
right.
Great news. Great start to the year.
It was only a matter of time before SoFi became a bank. It's they feel more like a bank than a lot of the other fintechs out there.
Yep. They got a pretty broad, diversified offering for sure.
Yeah, exactly. And so. Yeah, and now the benefits of their football stadium will also pay off this year with the Super Bowl there in just a few weeks. So SoFi is certainly off and running to start 2022. I
can't think about SoFi Bank with first thinking about that Super Bowl ad they ran. I think it was like 2016 or something, where it was "Don't bank SoFi." And it was actually
how ironic.
And now it's kind of come full circle. But anyway, kudos to them. I think it's it's a good thing for fintech to get another bank over the line, shall we say. Speaking of banks, next story I want to talk about is this. It was Penny Crossman, an American banker, talking about this small banks set to go live with Bitcoin trading. And this is not just one or two or three or four. We're talking like 300 banks expect to go live with Bitcoin trading this year. In fact, by the end of Q2, they're saying. So you'll be able to go into your community bank app and buy Bitcoin inside your bank app. This is all done through NYDIG. They've sort of created the technology to do that. The banks have sort of worked through the regulatory concerns, and they have, I just dropped my connector here. That didn't cause any major noise. So anyway, they've gone through the regulatory concerns, the security concerns. This is endorsed by the American Bankers Association and the Independent Community Bankers Association, and it's all being enabled by NYDIG. I mean, banks. This is the year. Banks and crypto. What do you think?
Yeah,
this is the year.
Yeah.
Go ahead.
Yeah, I think it'll be interesting to see if people that are going to regular banks, how much they'll trade it. Are you going to be as active as some of these that are in all these like Robinhood apps? Are they going to be so active? It's probably a different demo that's in some of these banks. So It'll be interesting to see. A fun fact that I had heard is pretty much no one's going to horse tracks anymore. And my theory is because now you can, bet on things like this. And I think that's what we're seeing more and more people do. So I feel very bearish on the horse track market, but bullish on the crypto market.
Right.
I mean, these small banks need to do something to at least begin to get involved in the space before they're like 5 years behind in 1 year. And so they need to at least take small steps. And, certainly it's not the same demographic that uses, either Coinbase or Robinhood or whatever. But I'm sure someone's starting to ask the bankers, like, what's this crypto craze about? My son, my daughter, they're all involved in it. Like, should I be doing it? Do you guys do it? And so the community banks are probably like, it's shouldn't be that hard for us to do with good partners, and kind of see where it takes them, because eventually it's going to be widely adopted. It's already getting there, and doing something like this is probably not that big of a step for them, though I'm sure there's plenty of hurdles to get through. But it's something that they probably have to do.
Yeah, the one thing that was interesting to me about the article is that they said they have really resolved the regulatory concerns. And that was surprising to me, because I feel like the regulatory concerns are not resolved, is how it feels like to me. But you're going to get more and more banks. And I feel like the more banks that come in, the more the regulators are probably going to be a little bit more open, because if they suddenly got 300 banks that are offering this, do they want to just shut it all down? So I think it's still one to play out, but boy, I think it's going to be one of those things. There's going to be like a bank watch. I mean, when's one of the top 10 banks going to offer this? Because in Australia, the number one bank in Australia, Commonwealth Bank, or CBA, they are offering it today. And they've got like not just Bitcoin, but like 10 cryptocurrencies. They're using Gemini, but that's happening in down under. But here, I think it's only a matter of time. I don't know whether it'll be this year or whatever. But this is, as I said, this could be the year that banks get in. Anyway, moving on, I want to touch on Ron Shevlin's piece this week. He talked about bank fintech partnerships, and this was some pretty interesting stats here that I didn't really appreciate at all. He said that this is from Cornerstone Advisors. That's Ron Shevlin's firm. The survey they did, 89% of banks say fintech partnerships are important. Okay, that's good. And 65% have said they've entered into a fintech partnership. 35% have actually invested in a fintech. This is the thing that was really most interesting. Only 14% have realized a gain, a very modest gain, like they're talking 5% gain in revenue because of a fintech partnership. So, I think what Ron was basically saying was that the banks aren't really set up. A lot of it's fintech theater. They're not really set up to do this, but I'm just wondering if it's too early. What do you guys think?
Yeah, I think it's just too early to tell, right? He was looking at a lot of partnerships that were starting in 2019 and 2020. It'd be interesting to see, I think, during COVID, and if you had numbers for 2021, I think that changed. I think some of these banks wouldn't be able to, pretty much have functioned so much in the online world had the fintech partnerships, not existed. And we've just seen how much growth has happened in these partnerships during this COVID period. So it'd be interesting to see that, and would be interesting to see partnerships over a longer period of time. The other thing is, I think in the banks, there's only certain parts that are willing to work with fintechs, right? It's still early adopters. And if you're talking about some of these large banks, who cares? Even if the fintech partnership brings in like $100 million, it's such a small drop in the bucket compared to like, other parts of their real business. So I don't know. I would love to dig like really close into the data set and then see what he finds in a year or two from now.
I mean, I think the other number, the 89%, they must think it's important for some reason, and they're not just thinking it's important not to make money. So there's definitely some long-term way that at least they're envisioning that they're going to make more money this way. And so maybe it's not been realized yet. And I think I agree with both of you about it's probably too short term. But if almost 9 out of 10 banks believe there's value in it, then there has to be some payoff to it, because they're not just going to do it to do it.
Yeah. And that's what I think. I think we're just too early. Like as Kat was saying, 2020, 2021, really a lot of gains made, and that probably aren't going to necessarily show up in revenue in 2021. All right. There's going to show up in revenue in this year and next year. So I think I'd love to do the survey again in 2 years' time. And I think it's going to be a vastly different result, would be my expectation. And plus, not only that, I think the thinking inside banks has altered dramatically in the last 2 years from where it was in 2019.
Mm-hmm.
Speaking of banks, we are going to talk about JPMorgan. They did their earnings call, and of course, they released all the data, and we got to find out how much money they made and how much money they spent. And the thing that everyone picked up on was this $12 billion number. That's how much they're spending on technology, and it's roughly half of it is to what they call run the bank, and the other half is to change the bank. So we'll, it's still.
I mean, that's the more interesting part of the story. Is like they spend $6 billion a year to upkeep crappy technology.
Mm-hmm.
That's more than most banks in the world spend on new technology. They spend it to upkeep crap. And I mean, it's obviously there's nuance to it, and I think part of the budget, which I found interesting, was migrating to the cloud. But still, I mean, that's a lot to spend on just keeping technology that you've already deemed that's not really very good.
This is probably why 89% think that the fintech partnerships are important.
Yeah. Right. And I mean, I think that's the piece here that I mean, not to be fair, to change JPMorgan Chase, their entire the whole their core systems. I can't imagine how complex that is. It's probably it's there's got to be thousands of different systems in there, but they changed the bank. That's what they talked about quite a bit. And they mentioned in the article too that one of the articles we were reading that Chase positions themselves as the underdog, going after the
scrappy Chase,
scrappy underdog with 59 million digital users. They are not exactly with that sort of budget. You can't call them an underdog in any shape or form, but. Anyway, let's move on to, I think, a really interesting story this week. There's the crypto.com. They, if you've been watching any sports over the last 2 months, you've seen Matt Damon talking about fortune favors the brave. The crypto.com commercials are played endlessly. I've seen probably them 100 plus times. Anyway, they were hacked last weekend, and it was really weird because it wasn't. A lot of these hacks happen, and people come out and they tell you all the details, and it's really damage control from day one. Originally, it said, there were no funds lost. That's what the CEO said, and then now the word comes out was yes that funds were lost, around $34 million, 4,836 ETH, 444 Bitcoin were actually pilfered off the accounts. Now they're saying the people who hold that money are going to be made whole, and they're not going to lose any of that money. But still, it felt like a strange story that was a really slow moving story all week. Is how it felt like to me.
Yeah, I have a feeling there's probably a lot more to that story that we don't know. Mm-hmm. But I do think it highlights an opportunity that we've been seeing in the space is for people to provide some type of insurance for crypto, both on the consumer side and also on the platform side. And it's one thing if it's social engineering and you make a mistake and you give someone your passport, you weren't careful enough. Everyone should be doing 2-factor authentication. It's another thing if the platform was actually hacked. And so there should be some type of insurance for that. And we're watching more and more companies come out to do it.
I also think it's just some people in the crypto space it's so much better just to be open and honest.
Right.
Why even put yourself behind the 8 ball? It's just say, all right, we got hacked. This is what happened. The more, and this is where, we know the people in Congress are can't understand a lot of this, but these are the things that they'll point to as, things. And this is a small example compared to some of the other things, but this is where they'll be like, oh, they can't be honest with their customers. They lie to, the public that they were hacked and they weren't hacked. It's like little things like this just give more ammunition against what could be a lot of clarity in regulation and stuff. And it seems like for every time there's movement forward, it's like something like this happens and they shoot themselves in the foot, a big CEO or something in the space. It's like, just be as transparent as possible right now.
Yep. It's one of the reasons why I have my crypto investments spread across 5 exchanges and a MetaMask wallet. It's because I feel like it's just it's a risk to have it all in one place. Before we go on, I do want to highlight just a little comment we had from one of the listeners here, talking about the big banks and talking about big banks buying small banks or merging with another bank. And fintech companies being a good option to create neobanks. Totally agree there. But let's move on to NFTs. We got a couple of NFT stories here. This one just came out today, and talking about Meta, formerly Facebook, but trying to get in the habit of calling them Meta. They came out today saying they are going to potentially launch their own NFT marketplace. They are going to allow users to display NFTs on their profile. Both Facebook and Instagram looking at NFT integrations for their platform. Interestingly, in a separate unrelated story, or separate and related, I should say, Twitter is also exploring putting NFTs on profile pictures. So, this is, we have OpenSea that has a ridiculous valuation and the majority of the market. When the first time I bought an NFT was on OpenSea. It was about a year ago now, actually. It was that's going to be a very competitive marketplace. It's not going to be just OpenSea having it to themselves.
Agreed. And it makes sense, though, that all these big platforms are doing it. I don't know why they wouldn't. And Twitter is obviously all about blockchain and what they want to be doing. And I see people, if you're going to go buy one of these Bored Apes, why wouldn't you want to display it everywhere to show that you belong?
Mm-hmm.
So, it makes sense. And honestly, I think that the more platforms that allow it, the better, because that's going to become people's digital identity, and they can do it cross-platform. So I think it's great that you can have it follow you.
Yeah, the more the better. And I think NFTs still probably have some time to figure themselves out. There'll be some craziness that happened with them, as was the case with crypto in 2017, 2018, and the market will kind of figure itself out. But the more places like this, the quicker you get to that. I think it can only be ultimately beneficial to the overall market in the end.
Right. And I think Kat hit the nail on the head. I feel like this is going to become our digital identity, or part of our digital identity. And, I think that's where NFTs, particularly with the younger generation, I feel like it makes logical sense. It's going to be such a sort of an integral part of, of sort of just, not just sort of on the Meta, on the Facebook platform, on Twitter or what have you, but when you're playing games, when you're in the metaverse, you're going to have your NFT follow you, being part of your digital persona. I'm really bullish on it. I think it's going to be a major trend that is not even really getting started yet. So, but on the NFT, just on the NFT story, I want to talk also about Coinbase, but Coinbase and MasterCard this week. So, because one of the things, as I said, I went and bought my first NFT like a year ago, and oh my God, it was one of the most painful experiences of my life. Just having to go and, you've got to get money into your MetaMask wallet, and you've got to, and the gas fees are incredible, and you have to pay. You have to go to OpenSea, and it was just a really it's like a 5-step process, and each step costs money and time, and So Coinbase recognizes this, and Coinbase obviously have their own NFT platform that they are working on, and what they're basically partnering with MasterCard. So you should be able to, on the Coinbase NFT platform, buy an NFT with your MasterCard. That's what it looks like is going to happen. So an easy on-ramp that will there's another bullish sign for NFTs.
I think this is one of the most important announcements, recently in crypto, because one of the reasons, people, I think, start the process and then they easily get dissuaded. And people are so used to just, one click, one swipe. You don't even have to swipe, one tap. And, and even in some stores, just walking through and it reads your card and your identity. And it's so painful a lot in the crypto market. And so if you can do this via your credit card and it's that simple, I think this is when you start getting more mainstream adoption. It'll be interesting to see how they deal with a lot of the security issues and chargebacks and things like that. Because it's so I can't wait to dig into the details of what this actually looks like. But I think this is one of the biggest steps for it to become mainstream.
And the other thing I think is the more that Visa, MasterCard, JPMorgan get involved, the quicker we are going to get to rules that are, more, I guess, uniform and easier for Congress to say, and the SEC, and then to say, all right, we have to do something now because all these big financial institutions are involved in some way or another in the space. And so the more MasterCards, the better. And ultimately it gets us there quicker because, if the banks want, the crypto regulation, they can obviously help to make that happen because of the power they have in Washington.
Right. Yeah, it'll be interesting to see how if the crypto companies can keep up with MasterCard and Visa have some of the highest transaction processing volume per second. Obviously, a lot of these other companies don't. So if the volumes go up, it'll be interesting to see some of the crashes or some of the delays that may happen, because I think MasterCard and Visa are at a whole different level than most of these other companies. But again, net, I think it's good for the ecosystem. And I think the regulators have come out and said they're going to take a stronger stance. But this is forcing their hand sooner than later.
Right. Yeah. Well, keep in mind though, I was realizing that Autograph, for example, the company that's Tom Brady's and a few other people's company, they just had a big raise this week. They you can buy NFTs there. Like they had a whole bunch. I see they got Naomi Osaka out there now, but they got Tom Brady, Tiger Woods, Derek Jeter, Wayne Gretzky. Superstars in the sports arena. And I've been trying. I've tried several times to buy NFTs on their site, but there's just the demand is so high. You haven't been able to do it yet, but you just need a credit card to do that. So there's obviously NBA Top Shot. They have their own. That's like a similar type of system. These are obviously centralized systems. What they're talking about is anyone be able to create an NFT and then sell an NFT. That's kind of where we really have. I think we have still got a long way to go. And I think that's what's interesting. I think about Facebook's announcement, Coinbase. You will be able to create your own NFT and sell it. And on Coinbase, it looks like it's going to be able to be done with a credit card, which that's a good thing. Okay, so moving on to my favorite topic, overdraft fees. And I like to highlight. We've been doing this for a while now, Kat, where there's been a lot of movement. Almost every week there's been something happening on the overdraft front. And we have this week Truist, another top 10 bank. Last week we talked about Bank of America and Wells Fargo. This week it is Truist. They're basically saying they're completely overhauling their bank accounts, their checking account. They're going to launch Truist One Banking, a totally new type of account. That's going to happen over the summer. It's going to have no overdraft fees, no NSF fees. They've acknowledged that this is going to reduce their overdraft income in a couple of years by $300 million or 60%. That's serious money. But they're obviously doing it. They're doing it because I think they've seen everybody else. They don't want to be the last. They don't want to be the last one standing without any kind of any kind of overdraft strategy to eliminating it. So more good news for consumers that not going to have these overdraft fees.
Certainly, one of the bigger impacts of fintech thus far in financial services has been, dropping fees at banks, and so those like Dave and Chime should get a lot of credit for this, and banks now have started to see the light, and they're kind of just forced to do this because I'm assuming that they're probably seeing customers go out the door because they're going to go to another institution that doesn't charge the fees or has a grace period and lets you get money in your bank account without being hit by these crazy fees. So huge win for fintech and a big impact thus far.
Agreed. It's exciting. I mean, these companies started existing because the banks were ignoring their customers that were on the lower end of their spectrum and just didn't care. And now they do. They realize, oh, these people actually do matter to us. So I think it was that. And then I think it's also that they were concerned that the regulators might go after the fees anyway. So rather proactively do it than have the regulator come after you and then at least, look consumer friendly. So huge hats off to Chime, Dave, Bridget, all of those that helped end this process.
Yeah, no, it's I totally agree. I think that I don't think we'd be in this situation, but for the moves that were made. I think it was Dave that was really the first on board here, and I think it's such a good thing for financial health. I mean, overdrafts is classic win-lose situation where the bank wins and you lose, and it's those sorts of things I always think are unsustainable long term. Now they've been around for decades. But it looks like the writing is finally on the wall. Because what I always hoped when the overdraft fees is I always hoped it would be a demand-driven decline, like that basically people would not be doing overdraft fees because they had better alternatives. And I think that's part of it, but certainly part of it is I think, as you say, regulatory risk as well. Anyway, we're going to wrap up this week with a story out of Russia. This was on CNBC. Talking about Russia they have a proposal to ban crypto use and crypto mining. And keep in mind, Russia is the third largest Bitcoin miner in the world. It used to be China was the largest. Then they banned it there. The US is now the largest. I think Kazakhstan is number 2 because all the Chinese went to Kazakhstan. Some of them went to Russia. Now Russia is talking about banning it. They have annual crypto transactions estimated at $5 billion worth. So, Russia, I don't know whether they're just trying. I mean, who knows what the real reason is here? But it's going to be one of those things where crypto mining is going to be probably focused on the Western world in places where it's probably not going to get banned. Any thoughts?
Yeah, I think you're also seeing, right? Yeah, going down to like South America too, right? Where people are welcoming it in open arms. Right. I think a lot of these dictatorships, they don't want to lose control and their economies are good enough. So I think even in South America where there's dictatorships, but your economy is not good, you're welcoming anything that can help kind of boost where you are and that'll keep you in power. Where the economies are actually doing okay and you think the government thinks they're losing control, I think they rather ban crypto or control it and make sure that it's done under their purview, which you really can't do with Bitcoin mining. So I don't think would be a huge surprise if they get rid of it.
Mm-hmm. Mm-hmm.
Yeah, well said. I mean, it's these dictatorships are all scared of it, and if it can't help them, then they're scared of it. China banned it, and they want to put everyone through the digital yuan. And they didn't want Bitcoin to get money out of the country and to avoid Chinese regulators. And Russia's probably doing something similar. I mean, it's kind of the way that those countries work, and I'm sure it will evolve to somewhere else in terms of the Bitcoin mining.
Yeah, and it's interesting also that Russia is planning to have a CBDC, a digital version of their ruble currency, and that's like China. I think China just wants everything focused on that. Mm-hmm. I think who knows if it's hard to predict what's going to everything be like 10 years down the track, but it's just, I feel like there's a lot of economic activity that's going to happen in the crypto space that is going to be absent from Russia and China. Anyway, that is a wrap for this week. Thank you very much, Kat. Thanks always, Todd. Quick reminder before we go, we have the FinTech Nexus Dealmakers Summit happening in Miami next month. Kat is going to be there. Todd's going to be there. I'll be there. Yep. You should be there too. And we will go to LendIt.com to find out more there. And of course, coming up fairly soon, it's only 4 and a bit months away now, is our big USA event happening in New York City, May 25th and 26th. So again, LendIt.com, check it out. So thanks very much, guys. We'll be back same time next week.
Thanks.
See ya.
See ya.
Bye, Cap.